Time now for On the Radar, when here on the street we ask our guests about what they are watching closely in the markets. Lyle Stein is with us this morning, president at Forvest Global Wealth Management. And you wanted to talk a little bit about momentum. I'm very interested in this subject. We talk about it every day. Yeah. Where is the momentum? Would you say predominantly in the United States? We keep talking about tech, records, all that kind of stuff.
Absolutely. Momentum is a feature of the now big cap U.S. technology stocks that have driven not just NASDAQ, not just the S&P, but the global market as well.
And I guess, you can see this in individual stock prices, but you can just see it in all sorts of products associated with the market.
Yeah, I think so. But, I mean, tech has been the bottom of the funnel, so to speak. Everything flows into that. Whether you are Microsoft, NVIDIA, the new $2 trillion company.
Amazing.
But, in Canada, Constellation and
Shopify,
those two are part of this momentum camp where things just get bigger, and when they get bigger, people think it's going to continue, which is the essence of momentum. It was up yesterday, it's going to be up tomorrow. I'll put money in there. Money flow drives this momentum, and there's been all that money that was created in the pandemic looking for homes that, again, the funnel keeps shrinking down to 7, now 6, and where it goes from there, I don't know.
I'm going to make a general assumption, and I might be dead wrong, but I think there is a certain investor that loves momentum, lives by momentum. But then another big group of people who feel very uncomfortable with the idea of just having to be looking at something because that's where all the noise and spotlight is, and in this case, green arrows are. So how are you supposed to think about momentum as an investor?
It comes down to your time frame. Time is the most important thing. As a long-term investor, capital markets do a good job of matching long-term expectations with a long-term asset. The difficult thing, as a long-term investor, you look at value. You look at the PE ratios and earnings growth and dividend payouts and cash generation. When you're more of a short-term orientation, you're more interested, is it to go up tomorrow? Who can I sell it to? Yeah. What's the next one to buy that somebody else I can sell it to 2 days later?
Right. We just showed a chart for our television audience. I want to pull it back up, and I think it gives us a sense on just some of the ETFs, because, some people buy a stock, but like IVV, well, why don't you walk us through what this chart tells us?
Sure. On this chart, John, there are 4 lines. The blue line is what we were talking about. It's an ETF that only invests in momentum. It's what's called a style. The white line, the IVV, is the S&P 500.
Okay.
So you can see how momentum up 26% since the bottom of the markets in October last year. Interest rates kind of got that big downward tick, and momentum stocks took off. Then you've got the red line, which is value. Those are the dividend-paying, low PE stocks. To put it in perspective, that blue line, momentum, they trade at 36 times earnings. The trailing numbers on the value, 17. And then we've got the non-value, the non-momentum ETF called EWC, which is Canada. We have not enough momentum stocks. We don't have enough of the growth stocks. And I mean, you could classify the growth stocks as being momentum. And then we've got this preponderance of banks and energy, which have not done well since the market began taking off in October.
Just to give our audience those numbers, financials in Canada make up more than 30% of the index. Energy is more than 15%. Materials is almost 10%. You quickly do that math. Tech is close to 10%, but we know in the U.S., tech is dominant.
In the 7, the Magnificent 7, are 27, 28%.
Right.
It's a very different market.
Yeah.
And as investors, you got to look at that. You got to ask yourself, why do you want to be in Canada? We ask ourselves that at Forvest all the time as being an international investment organization. Our portfolios don't have a lot of financials. We look very strange when you compare us to a Canadian index because we're looking abroad for our growth. We're looking on the U.S. right now, but Europe as well.
But to your earlier point, at the end of the day, if you're looking for truly classically defined value, you're going to find it in some of those groups that have had less momentum.
Precisely.
In the market.
Precisely. Yeah. And it was a momentum market up until interest rates spiked. And, it took NASDAQ, NASDAQ's now higher than it was way back before the pandemic. We lost a lot of money.
Yeah.
It came back. Only the 7 have really taken off above that. So momentum investing has worked for those particular names. But the issue is, as a momentum investor, how do you get off?
Yeah.
When do you get off Tesla? You know, when do you say enough is enough? Momentum doesn't give that. Once you cross 30 times earnings, what difference is it? 31, 32?
Right. You know, people